Welcome to Inside Insights, your quick hit of tips, tools, and trends for manufacturing, distribution, and Dynamics 365 Business Central. Brought to you by InsightWorks.
Imagine, just for a second, that you just bought a high-end $1 million sports car.
Oh, wow. Okay, I'm picturing it.
Right. We are talking absolute top-of-the-line precision engineering here.
Yeah.
The kind of machine that, it just responds to your every thought. So you take it out on the highway, the engine is purring, you are making an incredible time.
Sounds perfect so far.
It does, but there is a massive catch.
There always is.
Yeah, exactly. Every single time you hit a toll booth, you have to turn the engine off, unbuckle your seatbelt, get out of the car, and physically push it through the gate to pay the toll.
Okay, well, that completely defeats the purpose of buying a sports car. I mean,
Yeah.
You've got all that horsepower, but you're reduced to manual labor at the most critical checkpoint.
It ruins the entire experience.
Absolutely.
But, here is why we are starting with that exact image for you today. That scenario is identical to how thousands of businesses operate every single day.
Yeah, it really is.
They implement this massive, incredibly powerful software system like Microsoft Dynamics 365 Business Central. But then they treat their actual payment processing as this awkward, bolted-on afterthought.
Right.
They have this amazing digital engine running their entire business, but when it is time to actually take the money, they have to get out and push.
This is just crazy.
It is. So today, the mission for our deep dive is to examine the massive friction of business payment processing. We are going to break down the mechanics of a tool called Countersales, which is developed by InsightWorks specifically for Business Central.
Yeah, to see how it completely flips the script on how businesses handle money.
Exactly.
And, just for some context here, when we talk about an ERP enterprise resource planning software like Business Central, we are talking about the digital brain of a company.
The central nervous system, basically.
Right. Exactly. It tracks every piece of inventory, every dollar, every customer interaction, every employee, everything.
Yeah.
But historically, the payment terminal has sat completely outside that brain.
Which is a huge disconnect.
It is, because payments aren't just some separate, isolated event. I mean, they are the climax of the entire operational process.
Right.
They dictate how orders are fulfilled and how a transaction is ultimately recognized by the business. So treating that climax as an afterthought introduces operational friction at the absolute most critical point of the customer journey.
Okay, let's unpack this friction, though, because why does this bolt-on approach cause such a cascading failure? I mean, we see businesses using standalone credit card terminals all the time, right? So what is actually breaking down behind the scenes that you and I, as the customer, don't see?
So the breakdown happens because different departments in your business need fundamentally different things from a single transaction.
Okay.
Think about a busy parts counter at an auto dealership, or maybe a wholesale trade desk. At that front counter, speed is the only metric that matters.
Oh, for sure. You've got a line of impatient contractors waiting.
Exactly. Your staff needs to scan, swipe, and move to the next person.
Oh.
But now, shift your perspective to the sales team taking complex orders over the phone.
Right, a totally different vibe.
Completely different. For them, flexibility is paramount. They need to handle various card types, negotiate terms, or perhaps take a partial deposit for an item that isn't even in stock yet.
Yeah, that makes sense.
And then finally, look at the accounting department. The back office doesn't care if a transaction took 5 seconds or 5 minutes.
They just want the numbers to be right.
Exactly. They only care about accuracy, security compliance, and reconciliation.
The accountants just want the ledger to balance at the end of the month without having to, launch a forensic investigation.
Which is a very reasonable request.
Yeah, it is.
But the problem is that standard point-of-sale solutions typically force a business into a highly rigid setup that only satisfies maybe one of those 3 departments.
Ah, I see.
Yeah, so when an incredibly powerful ERP system forces you to use a clunky, detached payment model, your staff inevitably starts working around the system instead of inside it. They invent shortcuts.
But wait, I have to push back on this a little bit, just playing devil's advocate for you here.
Sure, go for it.
Isn't a payment just a payment? A customer walks up, they hand over a credit card, the little plastic terminal on the counter beeps, and the money moves from their bank to yours.
Right.
Why does it actually matter to the business if that specific terminal is outside the main ERP software? At the end of the day, money is money, isn't it?
Well, that is the grand illusion of the standalone credit card terminal. Yes, the money moved, but how does your business know why it moved? right? In a complex operation, a payment is never just a payment. If a transaction gets processed on a separate unlinked terminal, the cashier might be happy because the line keeps moving, but they have just created a massive data disconnect.
Because the systems aren't talking.
Exactly.
Yeah.
That standalone swipe does not automatically tell the ERP which specific sales order was paid for. It doesn't trigger the inventory system to deduct those specific SKUs from the warehouse shelf.
Oh, wow.
And crucially, it doesn't log the specific sales tax collected into the correct liability ledger.
Ah, I see the bottleneck now. So you essentially end up with a giant bucket of money over here and a totally separate bucket of inventory records over there.
Yep.
And some poor soul has to figure out how they match up.
And that poor soul is usually your bookkeeper. And you're paying them for hours of miserable, unnecessary work.
Ouch.
Yeah, when sales and finance operate in silos like that, reconciliation becomes a deeply manual nightmare.
I can imagine.
Someone in the back office has to print out a long thermal paper batch report from the credit card machine.
Oh, I hate those.
Right. And then they sit at a desk with a highlighter and cross-reference every single line item with the sales orders manually typed into Business Central. It is incredibly prone to human error.
Of course it is.
If the front counter and the back office are living in two different operational realities, your overall efficiency just plummets.
So if a disconnected terminal creates this massive accounting nightmare, the only logical fix is to stop passing the data back and forth and just put the terminal inside the ERP.
Precisely.
Which brings us to the core mechanism of counter sales.
That is the foundational shift. Counter Sales is an app designed specifically to bring payment processing directly into Business Central.
Right.
It stops treating the payment as a secondary step or a bolt-on appliance. Instead, the payment becomes a native, integrated part of the transaction workflow itself.
So from one single unified interface, your staff can build a sales order, take multiple types of payments, process complex returns, and even do that dreaded end-of-day cash drawer reconciliation, all without ever minimizing the Business Central window.
Exactly. Everything happens in one place.
To me, it's like having your executive chef and your waitstaff communicating seamlessly in the exact same kitchen, rather than the waiters having to run outside and shout the orders from a payphone across the street.
That is a brilliant way to visualize the workflow. I love that.
Everyone is working from the same sheet of music.
Right, because what you are fundamentally doing is eliminating the physical and digital space where errors occur.
Yeah.
By keeping the workflow in one unified screen, you completely eliminate the human error of rekeying data. Data is most valuable when it flows continuously.
Right, without interruptions.
Exactly. If your staff types a complex $1,000 order into Business Central and then has to physically turn around and type that total dollar amount into a separate card terminal,
You are just begging for a typo.
you really are.
A transposed number, like typing 1,050 instead of 1,500, that takes 2 seconds to accidentally do.
Oh yeah, happens all the time.
But it will take your accounting team 3 hours to track down on a Friday afternoon.
And beyond just the time wasted, it erodes trust in your financial reporting.
That's true.
In high-volume professional environments, like trade desks or commercial auto parts counters, you simply cannot afford those disconnects. You need the inventory, the order, and the cash to sync instantly.
Having a unified workflow sounds like the ultimate operational dream.
It really is.
But historically, in the software world, doesn't achieving that quote-unquote perfect integration usually mean you are walking into a trap?
What do you mean?
Well, usually the software company says, great, you can have a beautiful unified workflow, but you absolutely must use our specific proprietary payment processor.
Oh, yeah.
And you must accept whatever exorbitant transaction fees we decide to charge you. It almost always means vendor lock-in.
That lock-in is a massive point of friction for businesses, and it is a completely valid fear.
Right.
Payment processing shouldn't dictate your entire business model. Every single company operates differently. They have preferred banks, negotiated processing rates, and specific regional requirements.
Sure.
What makes the counter sales approach so entirely different is that it is built on a flexible integration framework.
Okay.
It does not act as the bank. It acts as the bridge. It supports multiple payment providers seamlessly.
Let's actually break down how that flexibility plays out, because I found the specific hardware and software integrations here fascinating.
Yeah, let's do it.
For instance, the system integrates directly with Clover. So if you are running a busy physical parts counter, you aren't forced to use a clunky keyboard to take a card.
Right.
You still get to use those lightning-fast physical tap-and-go Clover terminals, but the terminal is speaking directly to the ERP.
Exactly. And then taking that a step further into the B2B space, the framework also integrates with eBizCharge.
Oh, yeah, the B2B side is huge.
It is. And eBizCharge is a processor designed for deep financial workflow integration. It handles the really complex stuff like securely storing corporate cards on file and streamlining the reconciliation for massive wholesale accounts. And then you have integration with Stripe, which is perfect if a company wants entirely virtual payment processing without ever buying or managing dedicated physical hardware on a counter.
But wait, let's look at the mechanics of this. How does one single app inside Business Central talk to three vastly different banking backends without breaking?
This is where the magic of APIs comes into play. Application programming interfaces and payment gateways.
Okay.
Think of the gateway as a universal translator. The counter sales app provides the user interface, the buttons your cashier clicks.
Right, front end.
Exactly. When the cashier hits process payment, the app uses an API to send a secure encrypted message to the chosen provider, whether that is Clover or Stripe.
Got it.
The provider does the heavy lifting of talking to the credit card networks and the banks, moving the actual money. Then the provider sends a message back to counter sales saying, approved. Here is the authorization code.
Okay, so the ERP records the approval and closes the order.
Yes. The actual financial plumbing is completely abstracted away from the cashier's screen.
Okay, but realistically, doesn't every business just want to find the single best provider and be done with it?
You'd think so, but no.
Why does supporting 3 or 4 different ones actually matter?
Because best is entirely subjective.
Fair point.
The quote-unquote best processor for a retail storefront taking hundreds of $10 tap payments a day is vastly different from the best processor for a wholesale lumberyard taking massive $50,000 orders over the phone.
Oh yeah, totally different needs.
Right. The actual superpower of this flexible framework is continuity. Let's say your business uses Stripe today, but next year your CFO negotiates a significantly better transaction rate with Clover.
Okay.
You can swap out the back-end financial plumbing entirely, but the frontline staff's workflow inside counter sales remains 100% consistent.
That is incredible. You are separating the financial plumbing from the user experience?
Exactly.
The staff clicks the exact same buttons on the exact same screens to process an order. They don't even need to know the bank changed.
They really don't. And that continuity eliminates the need for massive operational retraining every time management makes a financial pivot. It drastically minimizes operational downtime.
Let's bring this down to the ground level and walk through what this consistency actually looks like in day-to-day scenarios.
Sure.
Think about your own business or maybe a busy local supply house you visit. Let's start with that in-person counter sale.
At a physical counter, the transaction just has to be fluid. With this integrated setup, the workflow is incredibly linear.
Okay, walk me through it.
Customer walks up, the staff member scans the barcodes of the items, which instantly builds the order on the screen in Business Central.
Right.
They click to take the payment, the customer taps their card on the integrated terminal, and the receipt prints immediately.
Boom. Done.
Everything from order entry to inventory deduction to ledger posting happens in one continuous flow, without the staff member ever minimizing their window or turning to a different machine.
But business isn't always face-to-face. A lot of high-volume sales happen over the phone.
And the workflow accommodates that just as smoothly. If a customer calls in an order, the system supports manual entry of the payment details through a virtual terminal right on the screen.
Okay.
It handles that one-time transaction securely and immediately applies the funds to the open invoice.
So no weird workarounds.
None. The staff member taking the call doesn't have to put the customer on hold, open an email browser tab, log into a separate banking web portal, run the card, wait for approval, and then go back into the ERP to mark the order as paid.
That sounds exhausting.
It is. But with this, it all happens in real time right where the order lives.
No, my absolute favorite scenario to look at is how this handles repeat customers and stored payment methods.
Oh, this is a big one.
It completely changes the psychological vibe of doing business. It's exactly like walking into your favorite local coffee shop where the barista already knows your face.
Yeah.
They know your complicated order and they just say, don't worry, I put it on your open tab. You just grab your coffee and go. It completely removed the friction of the actual transaction for your absolute best clients.
That coffee shop analogy captures the customer experience perfectly. Because if you have a contractor coming to your supply house every Tuesday, asking them to read their corporate credit card number over the phone every single week is maddening for them.
And slow for you.
Exactly. Storing payment methods is a game changer. But we have to talk about how that is done securely.
Right, because you can't just type a credit card number into a notes field in your ERP.
No, absolutely not. That is a massive security compliance violation.
Right, nobody wants their credit card sitting in plain text on a server somewhere waiting to be hacked.
Exactly why the architecture here is so important. Through integration with providers like eBizCharge, the customer's payment details are securely tokenized.
Tokenized. Oh.
Yeah, they are tokenized and stored on the provider's highly secure servers, not inside your Business Central database. Your ERP just holds a secure token, essentially a reference code, that represents that card.
So when that Tuesday contractor calls in, the frontline staff simply pulls up the customer's account, selects the card they have on file using that token, and processes the new order instantly.
Exactly. This level of seamlessness elevates the entire customer relationship. The customer feels valued and recognized.
For sure.
The transaction takes seconds instead of minutes. And on the back end, your data remains absolutely pristine, secure, and perfectly linked to the master customer record.
It makes those straightforward, happy path transactions incredibly smooth.
Yeah.
But, you know, as anyone who has actually worked in the trenches of retail or B2B sales knows, business gets messy.
Well, I always doubt.
Transactions are rarely perfectly clean. So what happens when the workflow hits a speed bump? That brings us to the complex transactions that usually break a standard retail setup: deposits, splits, and returns.
This is exactly where a rigid, bolted-on standalone terminal usually triggers a meltdown.
Totally.
Let's talk about taking a deposit first. In many environments, a customer isn't paying for everything up front. They are placing a special order for custom parts and putting down a 30% deposit.
Okay.
A standalone credit card terminal just sees money coming in. It doesn't know what that money is for.
Which is a massive problem for the accounting team, right? Because taking money for a product you haven't actually given the customer yet isn't standard revenue.
It is a huge problem. In accounting terms, that deposit is deferred revenue. It is a liability until the goods are actually delivered. Furthermore, calculating the precise tax on a partial deposit for unfulfilled goods is notoriously tricky.
I bet.
Because counter-sales operates natively inside the ERP, it understands the context of the money. It allows you to take the deposit directly on the order screen, and the ERP automatically calculates the correct tax and routes that money to the correct liability ledger.
That prevents so many audit headaches down the line.
Oh, absolutely.
And then there is the absolute terror of split payments. Anyone who has ever worked a counter knows this scenario. A customer walks up with a $300 invoice.
Oh, boy.
And they say, I want to put $50 in cash, $100 on this corporate card, and the rest on my personal card.
A nightmare.
On a standalone terminal, this requires whipping out a calculator, writing things down on a scrap of paper, and praying you do the math right while a line forms behind them. So how does keeping this inside the ERP solve that headache?
It solves it because the math and the accounting are no longer fighting each other. Counter sales natively knows the total balance of the invoice.
Right.
When your cashier applies the $50 in cash, the system instantly recalculates the remaining balance.
Nice.
You then run the corporate card for the $100. The system recalculates again. Finally, you run the personal card for the exact remainder.
And all of this happens within a single workflow screen.
Exactly. It natively supports layaways, special orders, and mixed payment types. And the best part, it handles all the complex ledger entries behind the scenes automatically.
So the cashier isn't left holding a drawer full of cash and a stack of confusing receipts at closing time?
That end-of-day manual reconciliation panic completely disappears because the ERP handled the split natively. The math is guaranteed to be right.
Which perfectly transitions us to the other side of the transaction coin, returns. Because taking money is only half the battle. Eventually, you have to give some of it back.
Handling returns securely is critical. A major flaw with standalone systems is that processing a refund usually requires typing a negative amount into the terminal, essentially creating a brand new, isolated financial event that has no link to the original sale.
Yikes.
Yeah, that is an invitation for fraud and inventory chaos.
Countersales fixes that by tying the refund directly to the history, right?
Yes. It allows users to process returns directly from the original transaction record. You pull up the original invoice, hit return, And the system knows exactly what items are coming back into inventory and exactly how much money needs to be refunded.
Oh, okay. That's really clean.
It is. It then issues that refund directly back to the original payment method through the gateway. You can even handle complex scenarios, like a customer returning a defective item but wanting to apply that refund credit toward a brand new, more expensive item, paying only the difference.
Wow.
The entire life cycle of that transaction is fully contained, tracked, and audited within Business Central.
So what does this all mean for you? Let's synthesize everything we have uncovered in this deep dive.
Good idea.
What we are seeing here is that implementing a tool like Counter Sales for Business Central isn't really just about picking a faster payment processor or getting a newer credit card machine. It is a much bigger strategic decision. It is about choosing how your business fundamentally runs. By integrating payment providers, whether that is Stripe, Clover, eBizCharge, or whatever fits your unique model directly into your ERP, you gain the incredible flexibility of multiple payment options without ever disrupting the daily workflow of your staff.
And that is the crucial takeaway for you to consider. Whether you are managing a fast-paced retail parts counter, overseeing a highly complex wholesale trade desk, or you are simply someone fascinated by how broken systems can be optimized to eliminate friction, the lesson here is profound.
Yeah.
Your technology should adapt to your human workflow, not the other way around.
Yeah.
When the user interface remains consistent, regardless of the back-end banking changes, it drastically reduces training time. It minimizes costly manual data entry errors. And most importantly, it ensures that the financial data flowing into your core systems is clean, accurate, and actionable. You aren't just choosing a payment provider, you are choosing operational harmony.
Operational harmony. I love that phrasing. And it brings me right back to where we started today, that $1 million sports car and the incredibly annoying toll booth.
Yeah, you got to get rid of the toll booth.
You do. When you eliminate the friction, when you stop getting out of the car to push, you finally get to experience the actual power of the machine you built. So, I want to leave you with the final thought to mull over today, building on the principles we just explored. If creating a unified, flexible workflow can completely eliminate the massive friction of human error and manual reconciliation in something as complex and heavily regulated as payments, what other rigid, bolted-on administrative processes in your own daily work could be completely revolutionized if they were simply moved inside your core workflow? Until next time, keep digging deeper.